Hello everyone, it's Brad again from dividendreaper.com, and today I want to talk to you about another type of budget. And today, that specific budget is going to be the self-tax budget. If you've read anything by Tony Robbins, you're probably pretty familiar with exactly how this goes about working. But for those who haven't heard or read anything by Tony Robbins or haven't the vaguest idea as to how he goes about trying to get people to save money, let me try to break it down in an actual example scenario. Let's imagine, just for a moment, that you're sitting at work at an internet cafe or doing whatever you would normally do, and the government comes up and taps you on the shoulder. And when you turn around to actually be addressed by the government, they tell you, "Hey, Charles Schwab, today we're going to go ahead and put a 10% tax on you." What would you do? Would you cry, scream, kick, moan, rise or riot? Whatever you decide you would do, when it really boiled down to it, there really wouldn't be much of a choice. You would have to pay it. Because if you didn't, you'd be in default and get yourself in a whole slew of extra problems that you didn't originally have. So you'd find a way to pay it. And this specifically addresses the issue for people who say, I make X amount of money every month and I don't have the ability to save. Well, if the government came and tapped you on the shoulder like they did in that last scenario, you would find a way. It wouldn't be fun. It would probably suck a whole lot, actually. But if this happened, you would find a way to find that extra cash to pay those taxes. And if it worked in the same way your normal taxes do, it would take right off the top before you ever even saw your check anyway. So your check would just feel like your check. This budget specifically works in the same exact way, except on a little bit of a hybrid scale to it, because I want to run about it a little bit differently for people who aren't used to the idea of maybe just cutting 10% right at the top. Instead, I want to loop it all together with your actual spending habits to not only influence how you save money, but also just naturally influence how you would go about viewing life and viewing money or dinero or the all too important mighty dollar bill. So what I propose for this budget is that if you're looking to save money on a self-tax sort of manner, I want to go by 3 rules. And the first rule is to make sure that everything you buy is on a 10% tax. Second rule is, as soon as you buy something, you immediately write that 10% tax down. Preferably on a notebook or in a spreadsheet, or for most people, if you have an iPhone or an Android, there's always a little notebook section of your phone that you can pull out and you can literally just type it right in there. So in an example that I posted on the blog, there is a gentleman or a lady that buys a Twix bar. Now, Twix bar could be $1. If you decide to buy that Twix bar, that means that you'd immediately take it out and you'd take your dollar and you'd times it by 0.10. So times 10% to get 10% of the dollar, which obviously is 10 cents. Not very tough there, but for the large numbers and more complex with change and etc., you might want to go ahead and use that math to do it. But basically, you just put a 10% tax on it. And you'll write in your phone, your notebook, or wherever you want to keep track of it, exactly how much that amount is. And rule number 3 is to basically use the resulting funds of that 10% that you've been sacking away with every single purchase that you've made, whether it be a Twix bar, or if you needed to buy a notebook, you could literally tax yourself 10% on buying that notebook. If it was a $5 notebook you decided to get, hit yourself with that 10% tax and take out 50% or 50 cents out of it, and that would basically go towards your savings. Now, the reason that I proposed it this way instead of literally just coming in and saying, oh, boom, 10% of your paycheck goes away, well, the 10% on the paycheck feels a lot different, and it doesn't really change your spending habits because then you'll just reach for it anyway. But if you do it in a manner that's just based on your sheer purchases, then not only will you be sacking away money, and you'll be probably left with more at the end of the month that you can either spend on rewarding yourself for actually sticking with the budget, or you can even just use it to invest with. Because rule number 3, which I guess I was slightly passing, is to take whatever those funds are that you had and do something substantial with it. Invest. 401k in your own individual retirement account, invest it in mutual funds, index funds, whatever your bread and butter is that you decide you want to go ahead and use that money, use it. This will be a good technique to basically teach you that when you buy something, that's the immediate repercussions of buying, is that you're going to have to take that 10% out as well. So if you've got $100 left in the month and you want to buy something that's $100, you can't, because you would have to actually go ahead and apply that $10 tax to it, the 10% of the 100, to that purchase that you'd have to save as well. And if you didn't have the motivation or the funds to do so, you wouldn't be able to do so. Now, some may think that this is a little ridiculous, and it may get absolutely insane with how many things in your first month you may be writing down in your notebook, and the math may add up, and the math just may be the most pain in the butt to track. But that's a good thing in this case, because you want to be annoyed. You want to be driven insane by having to do this, thereby making you purchase less. Or if you decide that you want to spend all your money on a big item and just pay the 10% on that big item, do it. You're not limited to it, just do the 10%. And it'll help you out in the long run, because you'll immediately see the effects of how hard that 10% tax hits you originally. But then after a while, very likely your spending habits will have changed, and you'll be used to the 10%, and you could probably up it. Because I know that's what happened with our family, is that immediately when we were doing our budgets and trying to save more, the more we tried to save and the more that we saw we save each month and was able to use towards investing and gaining more stocks that pay dividends, it's really a roller coaster effect, because as soon as you start seeing the funds come in and you start seeing the savings come in, it almost becomes a hobby to save. And then you start saving more and more and more and more and more. And suddenly we had a 55% savings rate on the next month that no idea how we even got there, from the fact that originally when my wife and I first started saving, I'm not even going to admit how low the percentage was on the first months when we tried doing it. It was like hard to find $100, where now we look at $100 and man, that would be a horrible month compared to how we're doing it now, where we literally just built our lives around doing things that we already purchased. If we bought bikes, we can use those bikes a ton. If we bought a Frisbee golf disc, we can use that all the time and don't have to really replace it unless we have a really bad shot and lose it. But realistically, your life will evolve around your spending habits if you just teach it to do so. And it's incredible how fast you will actually transition over to those new spending habits. But for those who have not been on a budget before, I feel like this is a really good one, because it really shows you the immediate impact and how big 10% really is. But it also gives you the ability to really jump into budgeting without having to sit there and go, I spend $100 on groceries every month, because you're probably going to spend everything that you were normally going to spend anyway in your first month. But when you look at it, you're going to see the 10% tax and you're going to go, man, that's a little bit different than normal. So if you haven't done this before, this is a really, really good thing to try to get you to save money. Obviously, be careful. Don't get yourself in any crazy debt situations where you're paying 30% on a credit card because you decided to run a credit card. Try it cash first, so that way you don't get yourself in trouble. But logistically and in the best form possible, try it. See if it works for you. And if it doesn't, it's just one more thing that you tried to get yourself in a better situation that didn't work. But if it does, you really just bettered your life situation by a heck of a lot, because I bet you very good money, not legally, obviously, but figuratively speaking, I would bet that you will end up in a much better situation, at least financially, and very likely in other things, because you really realize how much you're actually spending and how much you really care about certain items over other items when you get on a budget. With that being said, I feel like I've said my piece on the topic, but if you have any comments, please comment below, and of course, like and subscribe, and please visit the website dividendreaper.com for more. Thanks, and until next time.